As electric vehicles become more popular, savvy car buyers are beginning to learn the ins and outs of the new Inflation Reduction Act, which was signed by President Joe Biden in August. For new all-electric and plug-in hybrid vehicles to qualify for the full $7,500 tax credit, there are various manufacturing requirements that must be met. Some of these requirements, such as the sourcing of car battery components and critical minerals, will kick in on April 18 and phase in over a few years. Manufacturers are expected to have a harder time meeting these new requirements, so the number of cars eligible for the $7,500 tax credit may temporarily decrease. However, there are other ways to save money when buying a new EV and get a tax break. The Act also created a tax credit worth up to $4,000 for previously owned EVs, which took effect in 2023. This previously owned clean vehicles credit doesn't have any of the manufacturing rules attached to new EVs, so the selection of cars that qualify is much broader. The buyer must purchase the vehicle from a licensed dealer, it must be an older model year, and the sale price must be less than $25,000, among other criteria. Moreover, starting this year you may be able to get a tax break worth up to $7,500 for leasing new electric passenger vehicles as well. This credit is created for business owners, however some manufacturers have indicated that they are passing on the full amount to consumers for leasing purposes. Therefore, if the new EV you want isn't eligible for the full credit, you can either opt for a cheaper used car or consider leasing a new model. Keep in mind the income restrictions, which are much lower for used EVs than for new ones, and the fact that both of these credits are non-refundable, so make sure to plan accordingly. For more information on the new Inflation Reduction Act and how it might affect you, check out your respective state tax service.